So, David, first and foremost, are you a believer in the Santa Claus rally? And I want to go back to the action we saw yesterday. Major indices lower. A lot of people thought it was profit taking, specifically when it comes to tech. All right, that was yesterday. If you look throughout the month, you're seeing the equal weight outperforming the market cap weighted. That's kind of a sign of broadening. Can we get a Santa Claus rally? Can we get a strong start to the year if people are broadening out?
Well, we would say that this December, the fourth quarter, has been the Santa Claus rally. So we're a little bit less concerned about the last 5 or 7 days. But we do think that 2026 is going to be a year of rotations, and we do think that the market is going to broaden out. We think a lot of the things that did great this year are going to slow down, and a lot of things that didn't do as well will start to catch up.
All right. One of the things that you're looking at are dividend and value stocks. OK, so I'm just looking at the charts. I used a couple ETFs. I used the S&P Spider 500 High Dividend ETF and also the Schwab Large Cap Value ETF. Both of those underperforming the S&P so far this month. So during a time we are seeing a broadening, those two plays that you're looking at, they're underperforming. Do you expect them to reaccelerate next year? I mean, what's not priced into these two trades? Because we have a bit of a dovish Fed. I think most people are expecting 2 cuts next year. That's part of your thesis why these trades are going to work better. Why do you think we haven't seen it yet?
The fact that we haven't seen it yet just means that there's more potential. And there have been some dividend stocks like the Vanguard High Dividend Fund that's actually having a pretty good year. But we do think there's a lot of catch up. It's mostly the sectors like consumer staples, consumer discretionary really haven't done a lot. They've got a higher representation in some of these indexes. Energy hasn't done a lot. We think that the things that haven't done as well are going to be a lot more interesting. They're at lower valuations. We think some of the highest PEs in the market are going to slow down a great deal. So it's just a question of rotation happening, and you're not going to see it until it actually starts to happen. We fully expect it to broaden out. And if you use the hockey analogy, go to where the puck is. We think value, we think dividends, we think small cap is where the world is going to be going next year rather than the mega cap tech, which we still also like a number of names there as well.
All right, I want to talk to you about another area of the market that's really been active lately. That's the metals market, gold, silver, and copper in particular. How are you viewing those trades? Are you pushing clients to invest in these themes of the idea that commodities are scarce right now, they're going to have more value, and especially benefit to the real economy if we do see things like nearshoring here in the U.S. or reshoring here in the U.S.?
We don't think so. We think that gold has had its best year in almost the last 50 years. Silver, the same thing. We think that you're getting to the trade very late. Right now, people are buying gold and silver and a number of these commodities simply because they've gone a lot higher and they're jumping on the momentum trade. We think that's not the place that you want to be. So we would not be chasing that rally. We would not be putting new money into those things. If you do have exposure there, we would rather be taking profits rather than putting the money in.
All right. I also want to talk to you about tech. I know you like Meta. Meta announcing a deal for Manus. What is your view of the tech trade? You're saying it's going to broaden out small caps, value, dividends. Does that mean the tech trade stalls? Is it going to be positive next year? It's hard to believe that it wouldn't be positive and the market would be positive.
We think it's going to be positive. It's just not going to be as robust. What you've seen this year with the Mag 7 is there have been a lot of rotations. Some have done great. Some have not done as well. Out of the Mag 7, 5 have underperformed the S&P 500 this year. 2 have done phenomenally well, like Google, which has brought up the overall averages. Next year, we think some of the recent laggards like Meta, like Microsoft, are due for better times. We wouldn't chase Google, which we own a lot of Google. Our expectations are it's good, but just not nearly as good in the upcoming year.